Okay, update on the markets here as we continue to undergo this drawdown. And so I said last week, we were kind of set up for textbook bearishness. You can see on the weekly chart, we can start there. Last week we have this long upper wick, so we came right up to the high from the previous week and just couldn't clear it, dropped, and so we were set up for making a new weekly low, and that's exactly what happened yesterday. But you can see we recovered quite a bit of that actually, setting ourselves up for a potential turnaround Tuesday, which based on the futures it looks like we're getting. So this is potentially week 19. Again, we have a potential um, weekly cycle low on week 16, which would be super early. But as of right now, we're actually below the high from that week. That level is 44.53 on S&P on the SPX cash, which we may actually open up right around, given the futures are higher. We're probably going to have a gap opening, but the expectation is that we would make a new low below here, and this being week 19. Again, you can see the weekly cycle is usually in the 25-week range, although last weekly cycle was really long at 31 weeks, so maybe this one will be shorter. But I would expect that we get our low around the middle of March. Will be interesting though. I mean, if we go back and we just kind of look at the daily, you can see we're set up for a pretty easy swing low. All we have to do is get above this high here. But this is the level that really matters, crossing above 44.51 first. And then ultimately, we really need to get above 4,600. So, as I keep saying, this is setting up a really good risk reward. If we find ourselves above 4,600, maybe even a successful back test from above, that really sets us up for the run to all time highs. So, that's at least another 200 points, give or take. And if we think about downside, we can easily see downside to below 4,200, which from where we are now is well over 200 points. So, whichever direction we break in, there's going to be a good amount of money to be made because there are a lot of points available. And if we jump to the futures really quickly, to kind of to look at live action, because the market hasn't opened yet, and you can see this is your turnaround Tuesday, right? Like if I'll zoom into the daily chart, this was your yesterday, so it looks very similar to the S&P cash, and you've made a significantly higher high above yesterday's high, right? Like right there. So above that 44.28 level. But you can see again, as I keep saying, upper wick is a pullback on a lower time frame. And so we're clearly pulling back here. If we look at the hourly, we can see this was set up for a pullback because we had this huge candle at 3 a.m. Overnight, and then you had this creeping up, creeping up, creeping up. So like this is like a rising bearish wedge on some time frame, right? Like if you like zoomed in, yeah, if you look at it on the 5 minute time frame, you can kind of see and kind of draw the lines here, and you can see it's spilling over. So now it's a question of, do we hold the back test, and do we actually make a run to the 46 to the 4,500 area, and does that open us up to maybe another test of 4,600? We'll have to see. The market is definitely stronger than I would have expected, but I think part of that is we're really gyrating based on headlines. So there's a lot of noise in here. And so that just makes watching price action and understanding your levels even more important. So we're definitely pulling back here, which will make it interesting to see how the S&P cash opens. I'd say this is still pretty treacherous. We're most likely going to open up with a gap up, which often gets filled. So I think caution is still the order of the day.